The sales volume sample size has finally increased this week, and all signs point to continued growth. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, March 22nd. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so that you can know how the market is affecting you as a homeowner who's thinking about selling, or as someone who's looking for a house that you will love to call home. Let's take a look at how this week's market performed. Inventory stayed flat this week, 27 homes, and the average asking price of those homes increased by about $50,000, give or take. The number of pending homes doubled this week, with 12 going pending this past week as opposed to 6 the previous week, and the average asking price of those pending homes increased to $1,955,000, up from the $1,772,000 last week. And one home closed this week, which is one less than last week's too. The sales price of this week's home was $1,720,000, which is significantly lower than the two average prices from last week at $2,075,000. So now that we've analyzed the market and how it performed this past week, we can look at the broader trends and indicators that help us give you insight into its overall health and potential future direction. But before we proceed, if you do find this information helpful, go ahead and hit the subscribe button down below so you'll be first, you won't miss out on any future updates. And why not share it with a friend as well? Everyone deserves to be in the know about their local real estate market. Okay, let's take a look at how the market performed this week, or the broader trends. Starting with inventory. It came up to a more sustainable level in the past couple of weeks. 27 homes is still about 70% of normal inventory, but it's at least now relatively even with the average for last year. Having a moderately low level will likely continue to drive competitive offers, but having the inventory come up from the drastically low sub-10-digit number or double-digit numbers will help avoid buyer fatigue. With the turnover, or with the inventory creeping up, it might be safe to assume that the turnover rate will be falling. Now, that did occur last week with the sudden increase of inventory that we saw last week. But with the number of pending sales doubling this week and the inventory remaining flat for the past 2 weeks, it has made the last week's dip more of a minor artifact in an otherwise hot turnover market. Another indicator that the market remains hot despite the recent spike in inventory is the over-under price. Houses have been closing at an average of about $90,000 for the past 6 weeks. With the continued high turnover rate, that number is likely to stay in the 5% over asking range for some time still. And still more evidence of the hot market is the average sales price statistic. The 30-day rolling average closing price rose again this week by about $54,000. Single-family homes in San Ramon are now selling on an average for an average of $1.9 million, which is 2% higher than the same time last year. And now the Tech Equities Fund, it continued to perform at a constant over the past few weeks. While it isn't the steep growth that we've been experiencing for the past first quarter of this year, a steady, flat fund still is a good indicator that buyer confidence will remain strong. And finally, talking about interest rates, the Fed announced this week they are still going to hold off on cutting interest rates. But they do continue to talk about rate cuts coming this year. With that news, mortgage rate interest rates saw a move back in the upward direction. The national average for a 30-year fixed rate loan is now up to 6.87, just a slight move upwards. Mortgage rates will likely drop once there's more clear indication of when the Federal Reserve will actually pull the trigger on these rate drops that they keep promising. The overall trend for the past several weeks has been slow but steady upward movement in the market. The low volume of sales has made it difficult to draw any real conclusions about trends and patterns due to the low sample size so far. However, the recent increase in inventory and maintained turnover rate will make it easier to gauge how the market will proceed moving forward. And at this time, it looks like that will be a continued, albeit maybe slow, upward trajectory. Thank you for joining me for our weekly update. I hope this information helped you understand how our market is impacting your options. And don't forget to hit the subscribe button and ring the bell so that you can stay informed on how the market is shaping up this year. And if you do have any questions about how you can navigate the stressful and confusing process of selling or buying, leave a comment down below or reach out to us directly, and we're here to help guide you every step of the way. I hope you have a safe weekend, and I'll see you next week with a new update.